Recall that in the previous video, we introduced an important non-taxable exchange related to involuntary conversions. Under Section 1033, realized gains due to involuntary conversions can be deferred, but the taxpayer must qualify either due to the functional use test or the taxpayer use test. For condemnations, the involuntary conversion rules are a bit more generous, in that the like-kind exchange rules will apply to the replacement property. In this video, we'll talk about how long the taxpayer has until he or she can find and put into service the new property, and for the realized gain to remain deferred. That is, what's the time window during which the involuntary conversion remains eligible for non-taxable treatment under Section 1033? Well, the replacement time period is defined as how long a taxpayer has to replace old property with new property and to retain non-taxable treatment. There are two dates that are important here. The first is the earliest date for replacement. That is, when does the clock start in terms of when the taxpayer is eligible for non-taxable treatment under Section 1033? If the property is condemned, then the earliest date for replacement is the date of the threat or imminence of requisition or condemnation of the property. But if the involuntary conversion is anything other than condemnation, the earliest date for replacement is the date the involuntary conversion occurs. For example, if a fire burns down my restaurant, the earliest date that I can find and place into service a replacement restaurant and still retain non-taxability on any realized gains is the same day my restaurant burns down. If my restaurant is condemned, then the earliest date that I can find and begin using a replacement restaurant and still retain non-taxability on any realized gains is the date that the state threatens to condemn my property. Overall, the earliest date for replacement is a generally straightforward concept. However, what's not so straightforward, unfortunately, is the latest date for replacement, which I'll describe next. The latest date for replacement is a bit trickier to understand. Interestingly, the latest date for replacement has a starting date. That is, when do you start the clock to figure out the last date you can replace property under Section 1033 and still retain non-taxability of realized gains? So the starting point for determining the latest date for replacement is the date any realization of gain. This is the date that the taxpayer receives some sort of an asset inflow, for example, cash or other property from the insurance company that's associated with the involuntary conversion that's large enough to produce a realized gain. For example, the date that you receive insurance payments from your insurance company to go out to buy new property would start the clock on figuring out the latest date for replacement. So what do we do with this starting date? Well, the general rule here is that the taxpayer has 2 years from the end of the taxable year in which the gain was first realized to go out and put into service replacement property and still retain non-taxable treatment under Section 1033. But if the form of conversion is a condemnation of real property, which is used in a trade or business or held for investment, that period is 3 years. I think the easiest way to see these dates is to do some examples using specific dates. Let's say that on December 8th, year 20X1, Craig's business property was destroyed by fire. Craig receives insurance proceeds on March 31st, year 20X2. He would like to elect to defer recognition of the gain under Section 1033. So what are the earliest and latest dates that Craig may replace his involuntarily converted property and still qualify for gain deferral under Section 1033? So let's pull out the key dates here. We have December 8th, 20X1, the date the property was destroyed by fire. In other words, this is the date of the involuntary conversion. The second important date here is March 31st, 20X2, the date that Craig received an asset inflow of insurance proceeds. We can use these two dates to figure out the earliest and latest date for replacement. In this case, December 8th, 20X1 is the earliest date for replacement, because this is the date of the involuntary conversion, so nothing too tricky here. But what about the latest date for replacement? Well, the starting point for the latest date for replacement is March 31st, 20X2, because this is the date of the asset inflow, or the receipt of insurance proceeds. What we need to do now is jump to the end of this fiscal year. Assuming Craig is a calendar year-end taxpayer, we'll jump to December 31st, year 20X2. Now we add 2 years to the end of the fiscal year. We use 2 years because the fire is not a condemnation. If it were a condemnation, we would add 3 years. So Craig has 2 years from the end of the tax year in which gain is first realized to replace the involuntarily converted property but not condemned property. Therefore, the latest date for replacement is December 31st, 20X4. So in order for Craig to elect deferral of gain under Section 1033, his window during which he needs to find and put into service replacement property is between December 8th, 20X1 and December 31st, 20X4. Let's assume the same facts as before, but now Craig's business property was threatened to be condemned on October 31st, 20X1, actually condemned on December 8th, 20X1, and he receives his insurance proceeds on March 31st, 20X2. He'd like to elect to defer recognition of gains under Section 1033. So what are the earliest and latest dates that Craig may replace his property and still qualify for gain deferral under Section 1033? Again, let's mark the dates here and see how we can use them. The key dates here are October 31st, 20X1, the date the property was threatened to be condemned. We have December 8th, 20X1, the date the property was actually condemned, and we have March 31st, 20X2, the date Craig received insurance proceeds. So let's look at October 31st, 20X1. This is now the earliest date for replacement because it's the date of the threat or imminence of condemnation. Recall that for condemnations, we do not actually need to wait for the date of condemnation. As long as we are threatened to be condemned or there is imminent action to take or condemn our real property, we can go find and put into service replacement property on or after that date and still retain non-taxable treatment of gains under Section 1033. So what this means is that the December 8th, 20X1 date, or the date the property was actually condemned, is irrelevant here. Now, when would the date be relevant? This date would only be relevant if there maybe was no advanced threat or imminence of condemnation. If there was no threat or imminence of condemnation, then clearly we can use the actual condemnation date as the earliest date for replacement. But in Craig's case, the property was already threatened to be condemned on October 31st, so we'll use that date as the earliest date instead of December 8th. And now the latest date for replacement. Here the starting point is March 31st, 20X2, because this is the date Craig received insurance proceeds. As before, we then jump to the end of the fiscal year in which gains were first realized. That is, we jump to December 31st, 20X2. Finally, because we have a condemnation, we'll add 3 years. Therefore, the latest date for replacement is December 31st, 20X5. So in order for Craig to elect deferral of gain under Section 1033, his window during which he needs to find and put into service replacement property is between October 31st, 20X1 and December 31st, 20X5. In summary, we looked at the earliest and latest dates during which taxpayers could replace involuntarily converted property and still retain gain deferral under Section 1033. The earliest date of replacement is the date of the involuntary conversion, or if it's a condemnation specifically, the date of threat or imminence of the condemnation. The latest date starting point is the date of any gain realization, or the date the taxpayer receives an asset inflow like insurance proceeds. Then we jump to the end of that fiscal year and add 2 years for a general involuntary conversion, or 3 years if the involuntary conversion is a condemnation. So this gives us the window during which the taxpayer can replace property and still defer any gains under Section 1033.